Hello everyone, this is All Money Matters, a channel about money. Have you ever wondered how it would feel if the price of something as crucial as oil went negative? Let's take a step back and understand the gravity of that statement. Oil, the black gold, the lifeblood of our global economy, has held an undeniable significance throughout history. Empires have been built and wars fought over this indispensable resource. It's the fuel that powers our vehicles, heats our homes, and is a critical component in countless products we use every day. But on an unimaginable day in April 2020, a seismic shift occurred in the world of finance that sent shockwaves around the globe. For the first time in history, the price of oil plummeted into negative territory. Yes, you heard that right. Negative. That meant oil producers were effectively paying buyers to take oil off their hands. A concept so surreal it was hard to believe, even for the most seasoned financial experts. So what led to this unprecedented event? The answer lies in a global crisis that brought the world to a standstill, the COVID-19 pandemic. As countries around the world went into lockdown, factories shut down, planes were grounded, and roads were deserted, the hustle and bustle of everyday life came to a halt, resulting in a dramatic drop in oil demand. Meanwhile, oil producers, caught in an oversupply situation, continued pumping oil out of the ground. With storage facilities reaching their limits, and demand nearly non-existent, the price of oil began its freefall. This was the day when the unthinkable happened. The day when oil, the lifeblood of our economy, lost its value. But how did we get to this point? What led to this unprecedented event? It all started with the onset of the COVID-19 pandemic. As the virus spread across the globe, countries went into lockdown, businesses shuttered, and travel came to a near standstill. This sudden halt in economic activity led to a drastic reduction in the demand for oil. In response to this dwindling demand, the OPEC plus oil producer cartel, a conglomerate of some of the world's largest oil-producing countries, took decisive action. They aimed to stabilize the market by significantly reducing oil production. As the months passed, oil prices recovered and hovered around $40 from July to November. But as we all know, the pandemic was far from over. As case numbers continued to rise, so did the uncertainty. Yet in the face of this uncertainty, there was a glimmer of hope: the arrival of vaccines. With the promise of a return to normality on the horizon, expectations of economic growth and increased energy demand began to rise. Goldman Sachs analysts were particularly bullish, predicting that WTI oil could reach above $75 a barrel. The International Energy Agency echoed this optimism, repeatedly increasing its estimate of future demand. However, the road to recovery was not without its challenges. The ongoing global pandemic and potential delays in vaccine rollouts posed significant risks to this outlook. On top of that, the long-term focus on climate change posed a challenge for fossil fuels like oil. Despite these hurdles, OPEC Plus remained committed to their strategy. They faced pressure from the US to raise oil output, amidst concerns of oversupply. But believing in the resilience of the market, they stuck to their decision and increased output. This gamble paid off as oil prices stabilized around $75 a barrel. The world was on a roller coaster ride, and the oil market was no exception. The aftermath of negative oil prices was as chaotic as the event itself. The world had just witnessed a historical anomaly, a moment when the lifeblood of global economies was deemed less than worthless. The immediate fallout was a whirlwind of confusion and panic, a marketplace in mayhem, desperately grappling to understand the unfathomable. Just as the oil prices had sunk into the abyss, the OPEC plus oil producer cartel, an alliance of 13 of the world's top oil-exporting countries, sprang into action. They knew they had a critical role to play in stabilizing the market. And so they did, wielding the power of supply and demand like a finely tuned instrument. They significantly reduced their production, putting a halt to the freefall and nudging the prices back towards the realm of normality. The recovery of oil prices was a gradual process, a climb back from the negative to the positive. It was a time of cautious optimism and renewed faith in the resilience of the oil market. And then, a new player entered the stage, a game changer that no one had predicted: the arrival of vaccines. As vaccines began to roll out worldwide, the prospect of a return to normality started to seem less like a distant dream and more like a tangible reality. Economies began to stir from their enforced slumber, industries started humming back to life, and the demand for oil began to rise. The vaccines didn't just boost our immune systems, they breathed life back into the oil market. But recovery was not a straight path upwards. It was a journey fraught with uncertainties and punctuated by setbacks. Risks lurked in the shadows. The ongoing global pandemic, potential delays in vaccine rollouts, and the long-term focus on climate change posing a challenge for fossil fuels like oil. However, these challenges were not expected to significantly impact the oil market in the next few years. The oil market had weathered the storm, but the journey was far from over. In every crisis, there are those who find opportunities, and this was no different. In the midst of the chaos that was the plummeting oil prices, there were those who saw not a disaster, but a golden opportunity. These were not the seasoned Wall Street veterans you might expect, but rather a group of unlikely traders who managed to turn the crisis into a windfall of staggering proportions. These traders, against all odds, made $660 million from the negative oil prices. So who were these unlikely victors in the oil market's darkest hour? They were a diverse group from different walks of life. Some were seasoned investors, while others were newcomers to the world of trading. But they all shared one thing in common. They saw an opportunity where others saw only disaster. Their strategies were as diverse as they were. Some took a long-term view, betting that the oil market would eventually recover. They bought oil contracts at rock-bottom prices, betting that they could sell them for a profit when prices rebounded. Others played the short game, making quick trades to capitalize on the market's volatility. But regardless of their strategies, these traders all took significant risks. The oil market was in uncharted territory, and the potential for losses was as great as the potential for profit. But these unlikely traders were not deterred. They saw the risks, understood them, and chose to take them on, and their boldness paid off. When the dust settled and oil prices began to recover, these traders found themselves sitting on a fortune. They had turned the oil market's darkest day into their brightest, reaping rewards that few could have imagined. The story of these traders is a testament to the power of risk-taking and opportunism. It shows that even in the midst of a crisis, there are always opportunities for those willing to seek them out and take the risks that come with them. It's a story of how, even in the face of overwhelming odds, the bold can still come out on top. This was a classic case of fortune favoring the bold. But what does the future hold for the oil market, you may ask? Let's delve into that. The oil market has always been a roller coaster ride, full of ups and downs. This volatility is often driven by a myriad of factors, from geopolitical tensions to changes in supply and demand. Today, the oil market stands at a unique crossroads. On one hand, the ongoing global pandemic continues to pose a risk. Potential delays in vaccine rollouts or the emergence of new variants could dampen economic growth and subsequently, energy demand. On the other hand, there's a more long-term challenge: climate change. As the world gradually shifts towards cleaner, renewable sources of energy, fossil fuels like oil could potentially face a decline in demand. But experts believe that this shift won't significantly impact the oil market in the immediate future. Oil, they argue, will continue to play a crucial role in our energy mix for years to come. Despite these challenges, there's a sense of optimism in the air. Analysts are bullish about the future of oil prices. They predict a rise of around 20%, taking prices to above $75 a barrel. This optimism is fueled by expectations of economic recovery and increased energy demand as countries gradually return to normalcy. A key player in this narrative is the OPEC plus oil producer cartel. They have been instrumental in stabilizing oil prices by managing supply and demand. Their decision to cut supply during the pandemic helped the market recover from last year's crash. Even now, they continue to play a pivotal role in shaping the future of the oil market. However, it's important to remember that these are just predictions. The future, after all, is uncertain. The oil market will continue to be influenced by a multitude of factors, many of which are unpredictable. The oil market, much like the world, is in a state of flux, but one thing is certain: it will continue to be a vital part of our global economy. Thanks for watching. Remember, like, comment, share, and subscribe if you think our video bring value to you.